Okay, hey traders, this is Luke from Breakout Trading. Uh, what we have here today is just some basic chart reading patterns, candlestick formations. We're going to go through my top four, the ones that I use pretty much every day, and then a little brief overview of some of the other ones. We'll also want to go over uh, ways to identify them um, before they finish, and I also want to go over when is the time to play them. And that might not mean anything right now, might not make sense, but by the time this is all wrapped up, it should all make sense now. Candlesticks and chart pattern formations and things of that nature are all pretty much very basic and kind of like beginner level, elementary, whatever you want to call it. It's uh, something you typically learn when you're first starting. Um, and as you gain more experience, you start to go through, figure out what works, what doesn't work, why certain formations only work under certain circumstances. So I want to go over that. I want to go over places to find um, formations that are happening. For example, if you look at the screen right here, the one on the screen, this is a rising wedge breaking out and to the downside. Now, you might not have your eye on this, and this might be forming, and you might be looking at something else. Well, there are scanners and screeners that give you the ability to pretty much watch the entire stock market for your favorite formations while looking at something else. You can't possibly watch everything at once. So I want to go with my favorite, and I want to give a quick shout out to Harmon Haas for this is his page that he created, and also I have to shout out to anybody that this information is from. Any websites, I don't know whether it be Investopedia or something else. But one of my first and favorite formations I don't see is a bull flag and a bear flag. But before we go into that, I want to start off at the very top here, just so you can kind of understand the very basics here, what we have. Zoom out. Okay, so start from the beginning. Zoom in. We have basic how candlesticks are formatted. I guess that's how you say that. This is candlestick formation. So basically, you have a candle, and then you have a wick. Okay, so the candle represents within 1 minute. Could be 2 minutes, could be 5 minutes, could be 10 minutes, could be a day, could be a week, could be 3 weeks. It doesn't matter. Candlesticks can be set to whatever kind of time frame that you would like. So let's just say that this is a 1 minute, right? And you have the wick, right? The wick just represents the highest selling buying price and the lowest selling price within that minute. The body represents where it opened. I guess this would be a green one, a green candlestick, or a hollow candlestick. But usually we on the platforms we use, we see them as green or red. But this would be a green one, or a hollow one, or even a blue one. It doesn't matter. But this is where the stock opened, and this is where it closed, and this is where it went within that minute, and that's actually very important. You know, a regular line graph does not give you as much information as a candlestick may. So that's basically a green candle, and then this would be a red candle or a filled candle. The only difference is it's still the highest selling price and the lowest selling price, or the lowest buying price rather, the highest buying price and the lowest buying price, and then the open and the close. for that minute, for that day, for whatever. So that's the basics of a candlestick. And candlesticks in formation with patterns are very important because, let me exit this. If we zoom down, just gonna kind of skip through what I like. He has a basis here of certain type of candlesticks that you might see throughout the day on a regular candlestick chart, something along the lines of this, right? So you have an engulfing candle. Well, these are all green. So an engulfing candle pretty much typically is engulfing, the reason it's called that, another candle. And for sake of argument, let's just say that this was a red candle, right? Say it's a red candle. It literally covers the whole previous candle. And again, this doesn't matter if that was a day candle, a minute candle, whatever. If ever you see something like that, that's a very, very bullish candle. But you cannot really say it's bullish unless it's followed. Now let's just pretend that this right here was on one chart, these three candles. If you see an engulfing candle followed by another green candle, that's typically a sign of a reversal. And it's very possible that the chart formation kind of looked like this. Close that. But these are the kind of candles you would see. A doji candle is just a candle that opened and closed at the same level. Spinning top is a kind of a very neutral candle. You really can't tell. This doesn't really give you any kind of indication of where a stock is headed. A shooting star candle with a green bottom like this actually is considered a bullish candle because the body is telling you it's trying to go up. So this, as a matter of fact, this formation right here, if you were to look at these two candles, is very bullish. Okay, it's going up. Okay, the first time the body was here with the long wick, now the body's here. And let's just say that the third time the body was here, right? It's bullish. But since I don't have those formations here, let me move on to patterns, and then I'll show you these candles in real life and how you can use them to kind of predict what's going to happen. So just to go over, you have the engulfing, the hammer or hanging man. It's considered a hammer, I believe, when it has a red top, and it's also considered a hanging man with a red top. And the shooting star. But well, let's move on from that because that will become more relevant once we start looking at patterns. Now here are some patterns here, and again, one of my favorite, the bull flag, is not here. You can basically see. Let's look at the first one. Basically, tell you which my favorites are. I love ascending and descending triangles. It's basically as if the stock is condensing to a certain point, and it's almost as if it's building up pressure. You have to keep in mind that there's also volume coming in, so there's lots of money coming in, usually, and unless there's not, if there's no volume, this pattern could mean nothing. And again, I say volume is the most important indicator when it comes to trading. Um, but I like the ascending triangles. I like the descending triangles. Let's see. Oh, close drawing. I like a rising wedge, and I like a descending wedge. It's very similar to an ascending or descending triangle. As a matter of fact, um, it's only difference is it's actually it kind of does the opposite. As you could see, on a rising wedge, yeah, the overall formation of the stock is to the upside, but it ends up breaking down to the downside. On an ascending triangle, the overall formation is to the top, and it breaks up to the top. So these two are my favorite, and they're sometimes difficult you can get them confused. You can think that an ascending triangle is a wedge when it's actually an ascending triangle. Another one of my favorites is, of course, the head and shoulder, or the inverse head and shoulder. Head and shoulder always leads to a downward formation. As you can see, there's a shoulder, a head, and a shoulder, unless it's upside down, unless you're hanging from your feet, and then in that case, that would lead to a bullish formation. Okay. Well, it has this labeled as a flag, but it's more of, I'll show a better example of a flag. But yeah, you could say that this is a bull flag. Yeah, it is a bull flag. So as you could see, you know, you have to imagine this as not tilted. That's why a bull flag, you typically see one big candle followed by other candles, and it looks like a flag, and it usually takes off into the upward position. But I do want to go ahead and what is that? I also like the double tops and I like the double bottoms as well. But I want to go first on to one of my favorites, which is the bull flag there. And I want to start that example by looking at something that happened on Friday. RBZ had an amazing breakout. Went from, looks like it started from $5 all the way to $27. Now, this is not going to happen every time you see a bull flag. And surprisingly, the volume is not even that high on this. But as you can see, it's higher than usual when the stock is kind of in a flat position. There's definitely more buying than usual than the average daily volume um, indicates. But if you look here, you have the flagpole followed by, and you can almost say that the flag goes all the way up to 804. But forget that for now. Let's just keep it simple. You have the flagpole followed by almost like a waving flag. Now keep in mind, a flag is never going to go below the pole. You would never make a flag longer than its pole. So you can almost certainly dismiss this as a bull flag the second that the candlesticks start heading below the pole. But what happens in this case? Well, the candlesticks actually end up breaking above the pole and breaking out, going to the upside. So this is the perfect example of a bull flag. How would you play a position like this if you wanted to play it? Well, the best bet is you're waiting for a breakout above the pole. So myself, personally, I would put a buy order above the pole. So I would put an order in at like 720. It looks like the top of the pole is 701. So I might have an order in, a buy order at 702, a stop buy order, or whatever the top of that pole is. And then I would eventually get filled around here, and I would have a nice ride on that one. Now that is a little very rare. This doesn't happen often that a stock shoots up 100%, or more like 1, 2, 3, 4, 5, like almost 400%. It looks like this shot up. So I want to look for other examples of, I don't know if they have them. Let me see. Of bull flags. Now this is Finviz.com, and if you go to Finviz.com and you scroll down to the bottom, it will show you all the different types of patterns that we are looking at, but they also don't have a bull flag here. So I will just randomly find you one. Let's go ahead and go to the on demand. And let's go to the S&P 500. They're so prominent nowadays, and you always find them. Okay, so here's a good example of a bull flag. Okay. Now this one you could see is a little bigger, but here's your pole, right? Now you might say, well, that's not one candlestick. Okay. Well, let's say I were to do something like, I don't know, this. Okay? Now it's one candle, right? So now you have your pole, you have your flag, and you have your breakout to the upside. Okay? You can see it kind of on a one pole basis, And there's also another formation which is called a pennant, which was the next one, the one next to it on that list, which a pennant is like a bull flag with another pole and another flag on top of the flag. So as you can see, here's the flag, and then it breaks out, and that's kind of a pennant. It's very similar to a bull flag. It's like two bull flags almost, is how I would most accurately describe a bull flag. But you can see the flag, the formation, and then of course the breakout to the upside. And we all know, or at least I can remember, that on Friday this did end up going all the way up to, it's at 288.35. This went all the way up to 290. So that is a perfect bull flag. And even if you didn't look at the 30-minute, let's say you were just watching the 1 minute, right? You can still see within, okay, kind of almost like a pennant. You got the bull flag here. You got one here, followed by the break, followed by the pennant, followed by another break, and then it's kind of just flat throughout the day. But I want to move on. I think we got the concept of bull flags down, and we'll go to, let's see, ascending triangle. This is one of my favorites. Ascending triangle almost always has a break. Always, always, always. Not always. I would say a strong ascending triangle on a strong stock with good volume will almost always break out to the upside. Now let's go back to Finviz and let's find a live example. And this is all an ascending triangle is. It's a flat top. You can see that the stock is hitting the top here, and then it's kind of consolidating. It's got lower lows, but the same highs. Lower lows, higher lows, higher lows, higher lows, same high. That is an ascending triangle. Now, I want to go over to, where is it? Finviz. And let's click the ascending triangle, triangle ascending, and get some live examples. Now, if you take a look at these charts are actually, they look like almost yearly charts. Or what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9. A 9-month chart, I guess. But it doesn't matter. Like I said, these formations can happen in minutes, they can happen in days, they can happen in months, they can happen over years. It will still always play out. So let's see if we can't find, oh, this is a beautiful one. VTR. You could see it's got the same top. It's unable to break that resistance line there. And it's just same top, going up, ascending, ascending, ascending. And theoretically, this is supposed to break up to the upside. Let's see if there's any more. Some of these are better than others. EVI, here's another good one. Same top, ascending, 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 and this will likely come to a breakout. And so on and so forth. So that's an ascending triangle, and basically you have its counterpart, the descending triangle. You have lower highs followed by the same bottom. Let's look for a better example. Now, keep in mind, you notice that some of these examples are not very clean, and what I've kind of noticed is that the more clean the example, the more likely it is to break out and the bigger the breakout. So in some of these examples, it's not very clean. It's a little choppy. You could kind of argue that, hey, it's not really a descending triangle. That's why I always try to find the best example I can for a descending triangle, and none of these look too clear. PATI looks pretty clear. There you go. It's kind of got the same bottom, same bottom, same bottom, but then again, it's not that clear of a formation. When I'm looking for a formation, I'm looking for something as clean as possible. But I think the concept of a descending triangle is out there. A descending triangle, and yeah, you can see this is a much cleaner example. It's got flat bottom, descending, 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 breakout. All right, now this is an ascending wedge. This is one of my favorites to play. I love playing this on the S&P 500. S&P 500 always breaks out on a wedge. It always breaks out on a channel. Let's go ahead and take a look. So a wedge is similar to an ascending triangle or descending triangle. A wedge could go in either direction. You could have an upward wedge or a downward wedge. An upward wedge always breaks out to the downside. And as you can see here, it kind of tells you your target range. Your target range is wherever the wedge hit its bottoms at, its lowest point. You could say that your target range is that point. At that point would be a good point to take a partial, sell 3/4 of your shares or 2/3 of your shares or whatever it is. Let's take a quick look. And then, you know what, let's just run down the list. And then I'm going to we're going to run through some active charts, maybe some live charts, and find some examples within the charts and find the pattern that led out to it. And then I'm also going to show you the candles. So here's a head and shoulders formation. Head, shoulder, head, right? It looks like a head and shoulders almost. And I want you to notice something right here, something interesting. It almost looks like it has two shoulders, right? On this head and shoulders, if I zoom in, it almost looks like a shoulder, head, and then like two shoulders. Sometimes that happens. Sometimes with the head and shoulders in particular, I have noticed that, because if you keep in mind, there's also another formation within the formation. You have a shoulder, a head, a shoulder, but there's something else here. And I notice it right away. So you got the flat base, okay? You also have a descending triangle within that head and shoulders. So you might be following this and say, closed drawing, you might say, okay, I see the head, the shoulder, I see the head, okay, it's starting another shoulder, it's going down, okay, now it should technically break out to the downside. Ah, it didn't break out, it's not a head and shoulders. Well, wait, there's another formation in there. As long as it never goes above this shoulder, you're fine. As long as, if it decides to pop back up, as long as it doesn't go above this shoulder, you're fine. That's okay. This could come all the way up to here if it wanted. That's even better. If it comes up to the same point, you're actually at a double top, which is another bearish formation. So we'll get back into that. And let's zoom down and see what else we have. Oh, this is the flag. He does have the flag here. So like I said, here's a bull flag formation. We already went over flags. And then you have the bear flag formation, which is the opposite. Always breaks out to the downside. This is the pennant, kind of like what I was talking about. Almost looks like a bull flag with another flag on top of it. Okay, this is a candlestick formation, but dark cloud cover is actually happens to be one of my favorites. A dark cloud cover is a red candle covering almost like a cloud, but not touching the base of a green candle. And that is a sign of a bearish reversal. So if you have a stock going up and you see dark cloud cover, is what they call it, it's likely, if the candles that follow confirm, you always have to see the confirmation. And now you can see here you got a little bit of a spinning top candle, which is also a technically could be a reversal candle, followed by what looks to be a little bit of a spring, which is a very long candle that passes the previous green candle. So this is the first one to do that since the dark cloud cover came into play. So what I'm basically saying is there's something called a spring. And a spring is a candle. It's usually, I'm trying to see if I can't find it somewhere else, but I can't right now. But a spring is basically the first red candle to pass the previous green candle. So here's the previous green candle. This is the spring. It passed it. Okay, and that also counts with red candles. So I want you to take a look at these candles here, and you can kind of notice there's no, it almost did happen here. You have a little bit of a spring. It's the first red candle. Oh, but it's going above, so it doesn't matter. It has to surpass it. But okay, yeah, here you go. Here's an example. So you have kind of an uptrend. It's shooting down. Now this would be your spring. It's your first green candle to pass over the red candles. Okay, entirely. And typically you do that on a 5-minute chart, but I'm getting sidetracked. We're looking at dark cloud cover, and that's not the perfect example of a spring right now. But this is the perfect example of a red spring. It's passing the previous green candle entirely, and it also starts a downward trend. And is there anything else going on this chart that could tell me that this would be going to the downside? I don't see anything right now. Not necessarily. Maybe an ascending wedge you have. I don't know. I don't have enough of the chart to really tell. 3 black crows. I like black crows as well. Um, Typically, black crows are done with 2 candles, but could be done with 3 is even better. So a black crow is basically a red candle followed by another red candle on an uptrend. Typically leads to a downward formation. So 3 is just even more of a confirmation that, okay, hey, you have a black crow, which means, 2 red candles going to the downside, and then a third one is like a super confirmation. There we go. And as you can see, oh, here's the chart to the right. If you follow along, it turns into a bad downtrend. All right, and let's see what else we got. Anything else on here? As for now, that is that. So now let's look at some examples of the market on demand. Let's go to the most recent date we can, which, okay, we're there. And, okay, so this is Thursday. And I guess I don't need to be on demand, but this is Thursday. Okay, we have something very interesting going on here. Very, very interesting. I see a lot of stuff going on. A lot of stuff. Let's just start at the very beginning of the day. Okay? Now, we have a big drop out the gate. I might be saying, hey, this looks a little bit like this looks like a bull flag to me, a bear flag rather. I'm expecting, if I see that out the gate, I'm expecting some downward action, right? Because you have the bear flag followed by the flag that never goes below the pole, or since it's upside down, above the pole, right? I have not seen the flag, so to me, immediately the market has given me a big indication. Boom, we're going down, right? I said, okay, all right, but now you're kind of flat. Now you're kind of not doing anything. Let's dig deeper. Let's look for more formations there. So we have our bull flag. I can see it from here. Right here, I see a shoulder, a head, and a shoulder. So I'm going to zoom in right here. Let me zoom out. Yeah. And as you can see, it's almost perfect. Almost perfect. And what's interesting is it's doing exactly what it did in that chart. If you go back to that chart of the head and shoulders, and you remember I pointed out, well, it looks like a head and kind of like 3 shoulders, you know? Well, it kind of looks like that here as well, because it didn't really break down here. So you have, let's zoom in. Beautiful. So you got your shoulder, your head, and then your other shoulder. And maybe you got like this weird kind of shoulder, but what you really need to look at to see, you really have to let the formation finish itself. See, something like this, you might say, well, that's the last shoulder, right? Well, we've always said that there's patterns within the patterns. So let's see if we can't find that. All right, so we have a head, a shoulder, a head, and a shoulder. And what happens after that completes? I think we can all guess it breaks out to the downside, right? Breaks out and starts going down, 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 down. And what's interesting is I want you to notice that this big drop that happened here, if I were to do this, you see the bottom of this candle here, if I were to do this, right? Extend to the left, you could see that where we thought it was the breakdown of the first of that head and shoulder that we thought was the end of the shoulder, but it wasn't. It continued. That bottom there, after it broke past that bottom is where it really sold off. Now, if you were short in something like this, you might be like, well, let's see. That's a 288. Let me just double check here. You would say, all right, well, I would go short on this if it blows below. Technically, you could even say the first shoulder of either one. Either one's a good entry. The bottom of one shoulder or the bottom of the first shoulder. But typically there's a neckline. And like I said, the neckline here is a little bit on a slant. And what's the neckline? The neckline is kind of where everything is hitting, the whole head and shoulders. And the neckline is kind of on a slant on this one, but it's a neckline nonetheless. So you got it kind of like that, right? Sorry, that's not a straight line, but you could see once it breaks past that neckline, and I'm going to use a professional drawing tool. So you got this, and it goes like this, and that's the bottom, and we're going to extend that to the right, is when the breakdown starts. So this first time it breaks through that neckline significantly. It looks like it tried to break, pop back up, and then really break. Sometimes it has to test, but it ends up breaking and falling through. And on a play like that, let's see, 288.45 to 287.58. That's about $1 move. So you might be saying, yeah, but that's a $288 stock. Luke, I don't have a lot of money like that. Like, I don't have money to be shorting stocks, that I see the formation that are $288. I mean, well, the first question you really have to ask yourself is how much money do you have? Are you just playing the market with $500? Because if you are, you're going to come out disappointed, even if you are trading on a commission-free platform. There are multiple opportunities in multiple places that you can get highly leveraged accounts, and that might be your best bet. For $3,000, you can get an $80,000 account with TradeNet, and that's what's interesting, is you can get as much leverage as you need. If you want $250,000, it's $8,100. Then you could literally buy thousands of these shares, and a $1 move is thousands of dollars. So there are ways around everything, and this aside, that's a perfect example of a head and shoulders. And what other formations do we have here? You kind of have another head and shoulders if you look here. You have a shoulder, a head, and a shoulder, but it doesn't really break. What I actually see here is not so much a head and shoulders. And another reason why I like my neckline on my head and shoulders to be flat, because what I see here, I don't know if you see it, but I see a descending wedge. As you can see, it's getting smaller, smaller, smaller. And where does it break up? To the upside. So that's a descending wedge. Now, there are thousands of stocks in the stock exchange. How many could you possibly watch? You could have 10 monitors and you couldn't even get a drop in the bucket worth of stocks. Yes, you can use your screener or your scanners to find the most hot stocks and then look for formations within them. But I never trade. And I also want you to see something here that's interesting as well in terms of candles. Let's see right when it makes the reversal. What do we see? Well, it looks like it's starting the reversal right here. So the first thing I see is, well, let's go to this one first when it breaks down. We have an engulfing candle. Remember we talked about the engulfing candle? It's a candle that completely covers this candle. Then you also have the black crow. You have two of them in a row. That's an even more bearish formation. If that's not your sign to enter, I don't know what else is. And then you have the third one, which is just incredible. And then, okay, let's see here. We have a little bit of a reversal to the upside. What's going on here? Do we have anything going on? Well, we have a little bit of a spinning top followed by two green and a doji. Really not a significant reversal candle formation. I'm just going to keep going through. Okay, right here. Boom. Beautiful. You have the engulfing candle. This candle completely engulfs the previous one. And just kind of, you could see it starts to uptrend from there. So on and so forth. So that's very interesting. But all those patterns, all those candlestick formations are great. The fact is you have to have your eyes open to buy them. Now, there's a saying that a trader's job is to sit. That's your biggest job, is to sit and wait for some of these formations to mature before getting in. You never get into something prematurely. If you say, hey, it looks like, if you ever see something that say, oh, it looks like a head and shoulder, I think it's a head and you're thinking about here getting in without the confirmation of at least that, that's a very dangerous move. You really want to get into a head and shoulders at the neckline. And that is the most safe spot to get in, is right at the neckline. Because anything can happen. It could look like a head and shoulders and then not be a head and shoulders, you know? So I want to pop over to TradeIdeas, which is my savior. Yeah, Finviz is great, but it's giving you yearly formations, and I don't feel like waiting another 2 months for this to play out. There is something on TradeIdeas called, well, TradeIdeas is known for Holly. It's known for its AI. It's known for its artificial intelligence. And this is incredible, this feature that I want to show you. This little thing right here. And it comes, it's so big it's on the other monitor, but it comes with a chart. And typically throughout the day, this thing is shooting out stocks at me. It's just got stocks ripping on the bottom, either red or green. And it tells you, you know, what's more, if stocks are more bullish or more bearish, and by how much. And then you can simply click on them, and then they come up on the chart. But the most fascinating part about TradeIdeas is I can configure, right click, configure, go to green data, configure, and I can add in any kind of formation that I'm looking for. So just to give you an example, there are tons of different types of formations you could look at, but I'm looking for chart patterns in particular. So those are these right here, different kinds of chart patterns. So you can go and you can say, you know what, I want to add some stuff. So you can see here I have an inverted head and shoulders, I have a regular head and shoulders, I have a double bottom, which we didn't talk about, by the way. Double bottom typically just does this. It'll hit a support line twice and then shoot to the upside. Or you could have a double top, hits the resistance twice and shoots to the downside. So I can put all of these in quite simply. Add defaults. And I can also, let's say I don't want to get a leveraged account. Let's say I don't want to get a TradeNet account. I don't want to do that. I just want to buy really cheap stocks and hopefully I'll catch the next RBZ that goes up 400% and I could turn my 500 into 2 grand and then my 2 grand into 8 grand. Okay, let's say you want to go that route. You could, all that stuff can be adjusted. You could adjust your price. You could say, I don't want anything above $10. I don't want anything above $100. I don't want anything below $30. But let's see. Now to add, if I wanted to, I can literally make one of these separately. Where is it? Oh, I can't move it right now. Just for chart patterns. So let me see. So let's say I want to look for a double bottom, right? Boom. I can add alert, and now I have a double bottom somewhere on here. Yeah, there's my double bottom. And then let's say I want to add, oh, I think I already had that on there. I want to add the double top as well. Add alert, boom. Now I have my double top. Now let's say I want to add, where's that list? Anything. More. Let's see if they have wedge, triangle. Let me see the ones that they have. I know they have a wedge. I just don't know why I'm not finding it. Why don't they have a wedge? Wedge. It's right here, the wedge. Oh, they call it triangle bottom. It's wedge, triangle bottom, whatever. So I can add my wedge. They have a broadening bottom, which, by the way, a broadening bottom always leads to the downside. Broadening top, head and shoulders, rectangular bottom, channel breakouts. I love it. Oh, and they have explanations of all of these. There's just so much that I could add to that, but most importantly, I want to add my chart formations. I want the computer to look for them for me. So now I hit OK, I save, and what happens? When the market opens, I'm going to start getting alerts. Not on something that's going to break out in 3 months, on something that's about to break out. And then I'll click it and I'll say, oh, look, it's showing me a descending triangle. It's about to break out to the downside. I'll do further diagnostics, and I'll say, what's the volume? Why is it going down? And I'll do what I'll say, and I'll make a decision on whether or not it's a good trade. And by the way, I just wanted to point something out. While looking at this chart, does anybody notice what I notice? Because I see it quite clearly, and we didn't go over it yet, but this is a perfect example of another one of my favorites. This is the S&P 500 from Friday. A cup and handle always leads to a breakout to the upside. So it's very, very likely that Monday will be a bullish day, which also goes along with the Monday-Friday rule, which says whatever happens on Friday will happen on Monday, and I believe we had a bullish day on Friday, so of course that would make sense. Also could be a little bit of, you got kind of it's almost, it looks like it hit a little bit of a higher high over here, but it's almost a little bit of an ascending triangle as well. And here's another thing about ascending triangles. When you fully chart them out, you can actually play the other end of the ascending triangle within that channel as if it's one big X. Sometimes, not all the time. But other than that, the modifications that you can make to this, so not only can I configure it to this one, configure it to the downside, I can configure it to the upside, I can configure it to the downside, and add whatever I want. Bearish strategies. And not only does it have chart patterns, it has everything you could think of under the sun. And there's hours of hours. And when you sign up for this, there's hours of videos that you can watch on whatever you like. If you're interested on the new yearly highs, which actually happens to be a favorite of mine, if I see a stock that's about to break the new 52-week high, that's up on earnings, that's blown past its pivot points, I love that. So that might be something I add. So I could add new yearly highs to my, let me go to add filters, add default, no, select alerts, add defaults, More. Let's see. New yearly. No. Yearly. Yearly. Let's see. Oh, here you go. New high, 52-week high. Boom, add alert. So now, if something's about to break into 52-week high, I'll get an alert. Or 52-week low, I'll get an alert. Save. Okay. Now, there's a lot of interesting pre-configured configurations for TradeIdeas that are just supposedly incredible and yield 90% profits and things like that. That TradeIdeas has already set up that you can pre-configure and just put in and just basically sit back and let the computer find everything for you. I don't like to be lazy. I still like to do my own studies, but I'm telling you, this is a great tool to have. And thank you, David, for turning me onto it. It was just another little thing in the corner until I started paying it some attention. And turns out she can sing. So, anyway, other than that, that's really the gist of it today. I hope you were able to get something out of that. If you have any questions, leave it in the comment section below. And that's pretty much it for today, guys. Thank you for watching my video. I'll see you Monday at 9 o'clock on Facebook. And then in the private room, I'll see you earlier than that. If you would like to join my private room, get text alerts, and get the private OCO orders, which is orders that have entry, stop loss, and exits that you can literally put in with something called an OCO order, which is by custom OCO bracket, and you literally put all that stuff in. You know, it could be this price, and this price. You know, your stop loss, your target, and your entry. So we call that the OCO order or the set it and forget it order of the day. We have a couple of those a day, but we try to keep it light. You know, we try to pick the best ones, and that way you know what to pick in terms of the OCO orders. Um, so that's for people who are going to work or just want to enjoy their life and let the computer trade for them. And we are keeping record of all the orders. So sometimes an order just won't fill. Like we'll say, well, we want you to buy it if it goes above the 52-week high because we know it'll break out. Well, maybe it doesn't go above the 52-week high that day. And in that case scenario, if it doesn't fill, nothing happens. You don't lose nothing, you don't gain nothing. Now, in some cases, in some stocks, we might ask you to put a trailing stop. And if you're not familiar with what a trailing stop is, so let's say we want you to get in at 288, 289.05, and we want your stop loss to your target to be 290, about $1, which means we don't want you really to risk more than a quarter. If you do get filled, but we want to see if this thing can go to 300, we might tell you, well, hey, do a stop order. You have to do a stop order. You'll have to do the entry on your own and then a separate stop order for trailing stops. But we don't do that very often, so you don't have to worry about that. But and in other cases, some stocks can't be OCO'd because they're not shortable. In that case, you have to do what's called a with stop order, and you do that like this. So you have your stop, your entry, and then you have to, once the order fills, you have to go back in and add your target, or you could even turn this to your target as well. So you'll have a target, an entry, and no stop loss, and you can come in later. Well, the best thing to do, really, honestly, is if we give you an order and we want you to set it and forget it, just kind of let it run. It's probably going to fill within the first 15 minutes of the day. So, but keep in mind that we keep this in mind and we try to find it in stocks that are OCO friendly, that will not be denied, and that you can OCO. And that's pretty much what we have been doing. I haven't had to pick a stock that hasn't been OCO friendly yet. But if I see something I really like that I think you have a lot of potential to make money on, then I will ask you to execute the order and then put in a at least with stop order. So you can put your target and your stop loss. Anyway, that's that. Trade ideas. If you like trade ideas and you want to sign up for that, there is a link below. Along with if you use Breakout 15, you get 15% off. Yeah, and I think they even might have a better sale right now. I don't know. But if you click that link, it pulls up the newest sales that they have right now. That being said, and also if you're interested in using this kind of platform and you want to get a little more money, something like an $80,000 account, um, which is what I use. With the discount, it only comes to $2,700. I use an $80,000 account. I use a TD Ameritrade account, and I also use a Fidelity account. I use a bunch of brokerages, but keep in mind, I do that. I don't recommend that. I do that more for streaming purposes. We do different types of trading on the $80,000 account than we do on the the TD Ameritrade account. And so anyway, all those links are below on Facebook. And let me see if yes, Thinkorswim. I'm just reading some of your questions. Yeah, I know what you're saying, Frank. That chart, I was looking for the spring. I don't know if that was a 5 minute or a 1 minute, but a spring is most accurately utilized on a 5 minute with a decent amount of volume. So there's a lot of factors that I left out, but the most important thing that you get is these patterns here. If you would like me to send you this, I can send you that. So you could just ask me and I can send you this. But keep in mind, there is being a lot more stuff being added to this, and this was just to give you a brief um, little kind of like summary of some of the patterns. These are things that I recognize like second nature. I see patterns. I see patterns within patterns. It's almost like I don't know. But this chart, this is something that you should keep as your background. It's on the Breakout Trading group page. You can actually see it in the comments. You could copy this, make this your background, and just let this get burned into your mind. And I think you will absorb everything that you need to absorb. But let me see. I'm reading some questions. Sorry. If you could post that document. Yeah, I'll post that document. That's no problem. How do I do that? I can actually do that right here in the comment section. Have to go here. But yeah, like I said, these are burns in my mind, and there is a lot of other stuff. This is like very basic and very elementary, and I didn't really get into because I try to keep these things at an hour, otherwise it scares people and no one watches. So I will obviously we're updating this, and once it's more further updated, I will go a little more into the specifics of how you can use candlestick formations along with chart patterns, along with volume, the trifecta, to let you know whether or not to get in or to stay out or to get out or whatever. But that is the trifecta: is volume, a chart pattern, and also followed by a that chart was perfect. Uh, Also followed by a significant amount of volume. And I don't know what just happened to it, but you could see that when the market was thumping, it had the Black Crow going on. It had a ton of volume. Um, there's just so much more to it, and I need more time. So that will be next week's seminar. And let me just see if I can't send that to you right yippity snap. Let's see if that works. No, I don't think that'll work. Let's see. Yeah, that worked. So I have it there, and then oh yeah, I'm also gonna add that to YouTube as well. I'm over the characteristics. Can't do it. Interesting. All right, guys. Well, this has been a fun night. Luke from Breakout Trading, and I hope you guys enjoy the rest of your weekend. And I will see